We've got some special guests in our studio this morning. Daniel Needham, the president and CIO at Morningstar, is joining us, and Matt Wacher, the CIO APAC at Morningstar Investment Management, also joining us, of course, in the morning of their conference. It's an exciting day, gentlemen. Thanks so much for joining us.
A pleasure.
So, let's just kickstart by talking about the theme of the conference this time around, what you're going to be focusing on, what dialogue's going to be all about that you're trying to initiate this time around.
Sure. So the real theme for the event is delivering great financial advice in uncertain times. I think everybody would agree that these are pretty extreme economic sort of conditions that we face, and so the conference is really focused on how can you navigate that as a financial advisor. How can you stay focused on the right things? So, long-term retirement planning, as well as behavioural coaching that can be used to help advisors work with their clients. And so, in our view, the most important thing is that people save, keep saving, and don't try to time the market. So, switch between cash and stocks. And so, the theme is really designed to give people confidence.
It's interesting because, since you're talking about uncertain times, and I know both of you have been traveling all around the world over the last few weeks, give me a sense of really what people are saying. Is it really doom and gloom all around? I mean, the US, of course, currently is trading at records, but in terms of the expectation that we're going to head towards a recession and the naysayers, how deep does that feeling go?
Yeah, maybe I'll cover the US and hand over to Matt. So, I think people are concerned about a slowdown. I think that's probably the most consistent view we see. I think the probability of a recession, according to a number of different measures, is probably the highest we've seen since 2011. And, there's obviously a number of global macro risks that people are concerned with, especially sort of the trade war and the impact of tariffs. And so all of that is getting people pretty concerned. And so, I think the risks of a recession and a bear market are probably higher than usual. From our perspective, we think it's important to take a long-term view. So whilst the risk of a recession is probably higher than normal, it's always very uncertain. And so recessions, you're in a recession normally after the fact rather than during it. So so from our perspective, we look to position our portfolios to take advantage of where we see opportunities. And funnily enough, the biggest opportunities that we're seeing now are those areas that are most sensitive to an economic recession or trade wars. And so as contrarian long-term investors, we tend to invest in places where people are the most concerned because generally that's where the best opportunities are.
So would India be part of the pack? I'll just come to you.
Yeah. So India, I think India is definitely looking more attractive, certainly relative to, say, 2017. And investors are relatively concerned about a number of sort of macro issues in India. That presents an opportunity for us. We run strategies in India as well as global strategies. But I would say that India, along with another number of other emerging markets, are also pretty attractive for us right now.
Matt, you were saying?
I was going to say, we also see places like Germany and the UK, even factoring in things like the trade war and Brexit, there's still good opportunities there from a valuation perspective, taking into account those risks. Also, Japan is a reasonable opportunity for us, that we see as a reasonable opportunity at the moment, even though it's quite cyclical.
Tell me more about the conference. We're all, excited because it's an annual event now. Who all are the participants? Who are the corporates that we're going to be seeing at the conference?
So there's quite a few panel discussions. There's some around alternative investments, some around ESG. There's some Morningstar expertise going to be there around that. Certainly on mutual funds as well. We have some of our Jeff Patak, our leader of manager research globally there, speaking on our behalf. And there's other areas. So I notice also there's a session on contrarian investing that Daniel and I will be interested to see as well.
So, when you're talking contrarian, give me an example of what you're looking at currently. I'm not going to put you on the spot, but if there's
for
something you feel you could
We're always happy to talk about our contrarian investment views.
Give us a sense, because it's a really confusing time right now for investors. And I think it'd be interesting to know, how you'd apply that.
Yeah. So for example, the UK, everybody knows about Brexit, and there's a lot of uncertainty. Our view, we're actually quite positive on UK stocks. The pound is down a lot. The domestic banks and domestic cyclical businesses are under a lot of pressure. And so given that, we actually think UK stocks look relatively attractive. So despite the fact that most people feel the most confident about, say, US technology companies and US sort of platform businesses, the UK is pretty attractive. European financials as well is another area that people are very concerned about, and European telecoms. So we look for places where there's less, people are more pessimistic, there's less demand for the asset, and then we tend to find more attractive opportunities there. So
Okay, sorry.
Yeah, go ahead.
Okay.
No, I just wanted to understand that, I mean, equities, yes, is one thing, but is also the time to now diversify your portfolio perhaps to other, asset classes as well. Gold, for instance, is already sitting at a 6-month high. That can be said about silver as well. A lot of people look at art as an investment opportunity. How critical is this time, uncertain time, to try and diversify your portfolio and look at other asset classes too?
yeah, do you want to you can cover art and I'll cover
Equities.
I was going to say, so we, I mean, at the moment we also see your bonds, as quite expensive as well, and certainly we're probably in our multi-asset portfolios holding more cash than we are. We think that there'll become an opportunity to deploy some of that cash fairly soon. But things like art, even gold, we find very difficult to value. There's no cash flows associated with that. So we like to stick to what we know generally and invest in those sorts of assets with cash flows.
Sure.
We're watching out for the Fed this week, of course. There's a whole bunch of other stuff that's going on as well with central banks around the world and likelihood of everything being dovish more or less in commentary. What are you expecting from the Fed? And I think the bigger question is just how you see the movement of money, as Aisha was talking about earlier as well, from an emerging market standpoint. We're very curious to see how things really pan out.
Yeah, I think it's difficult to predict what the Fed's going to do.
Yeah.
And generally, I think probably the markets are the best guess that you've got about what's priced in. So, it looks like rates are headed down. That seems to be the most likely path. There's a risk of an economic slowdown in those environments. Central banks tend to start to cut interest rates. And so we're starting to see that happen. So I'd say, interest rates are likely to be heading down rather than up would be our view. Where the money's going to flow, I think people still want to see, people like to chase positive returns. And so as long as emerging markets are sort of lagging relative to, say, the US, they're probably not going to see a lot of support, which is what we like. We like to go where the money isn't going rather than where it is flowing. The outlook for interest rates is always very uncertain. I think trying to forecast long-term interest rates is really difficult. So generally, the current interest rate, is one of the best estimates of what you'll get for owning bonds. And, we look at Indian bonds, so emerging market bonds in their local currency are quite attractive. So we continue to own, a larger weight to emerging market debt.
Okay. Daniel, Matt, both of you, thank you so much for taking the time out and speaking with us. We'll, of course, see you at the conference tomorrow.
Great. Thanks very much.
Thanks a lot.
Okay, great. That's the word coming in from Morningstar. Remember, it's a 2-day conference which kickstarts tomorrow.